Inevitable mistakes cost a lifetime. The story of the famous Japanese banker who mistakenly shot $3 billion worth of shares for just $5,000 may have cost him a great deal. Known as the fast finger syndrome, this is how a Japanese banker mistakenly shot $3 billion worth of shares for just $5,000. Kindly subscribe to our channel and like this video. The fat finger syndrome, known in financial cycles, frazzled Mizuho Securities when a trader mistakenly sold 600,000 more shares than he was supposed to, accounting for the most extensive trading error in history. In December 2005, a worker at Mizuho Securities who remains anonymous mistakenly set to sell 600,000 shares of telecoms agency JCOM for 1 yen each. Instead, he had intended to sell one share of the telecoms agency for 610,000 yen. On the other hand, JCOM had only had 14,000 stakes in issue. Moreover, Mizuho Securities blamed it on a typing error. Whatever the case, the unfortunate had happened, and the order had gone through. The unfortunate incident shut down the Japanese equity market. The 600,000 shares contained 40 times the total number of shares put out by the company, and the massive disparity significantly generated a technical shortage of shares worth about $3 billion. At the same time, jitters over the dependability of the exchange's trading system contributed to a 1.95% drop in the model Nikkei 225 stock value. In their attempts to correct their mistake, difficulties with the Tokyo Stock Exchange's technical system thwarted the brokerage from discontinuing the auction. Mizuho Securities further stated that they made 4 different attempts to take down the order. Still, the Tokyo Stock Exchange said it did not terminate trades even if they were performed on mistaken orders. After that, Japan's Financial Services Agency demanded Mizuho Securities rectify its compliance and systems to stave off a replica of such a mistake. The regulator further stated that Mizuho Securities have failed to train traders adequately and didn't employ senior staff members equipped enough to supervise their processes of such a business. The turnout was fine as Makoto Fukuda, president of the Mizuho Securities, broke silence to say that the unexpected blunder caused an anticipated loss worth $223.3 million, which could rise above $248.1 million, but may not put the company's financial condition at worst. Adversely, shares in Mizuho Securities fell by a marginal 3.4%, following the most significant stock market error in history. Surprisingly, the fall happened to be the most significant fall of the day, and this came after Mizuho Securities stocks had burst to a record high in history. Moreover, little did Mizuho Securities realize their mistake had kindled mayhem across exchanges and other listed companies, accounting for a 301-point plunge on Japan's central equity market directory. The havoc took weeks to be sorted. The situation got so bad that Mizuho Securities, Makoto Fukuda, had to resign from office after a series of computer failures that tarnished the market's reputation. Some of the many Mizuho Securities misfortune winners include Takashi Kotegawa, one of Japan's outstanding forex day traders, who generated so much wealth trading stocks in Japan. In 8 years, Kotegawa whirled about $13,600 into over $153 million in 8 years. Kotegawa merits his victory for his short-term outlook and the fact that he pays no attention to future market prospects. Another is the United States investment bank Morgan Stanley, which bought about 4,500 JCOM shares that day. However, that asset was comparable to a 31.2% stake in JCOM's overall equity shares, but not up to 1% of the shares accidentally offered by Mizuho Securities. Other stakeholders were likely also to recount big theoretical stakes in JCOM. Mizuho Securities' error has by far cost the brokers some $30 billion in recouping the shares sold out. Makoto Fukuda tallied. The expense would later surpass Mizuho Securities' net income of $28.1 billion for the financial year ended in March. In other aspects, the Mizuho Securities trading error deteriorated the reliance of Asia's biggest stock market, the Tokyo Stock Exchange, bringing about the head of the exchange withdrawing from his position. To make problems worsen, several other brokerage companies within the country also experienced computer crises. Senior executives, alongside the president of the Tokyo Stock Exchange, expressed sincere regret to investors for the harm caused. The disaster was caused by a fat finger syndrome or keyboard error by the undisclosed employee of Mizuho Securities, whose mere intention was to sell one share in JCOM for 610,000 yen. This misfortune threw led the Tokyo Stock Exchange to shut down its operations on November 1, 2006. Mizuho Securities, which was then forced to buy back the shares at a more significant price, rounded up with an amount of 40 billion yen, snuffing out more than 3 months' net profit. Although the computer system ceased to function abruptly to aid Japan's comeback, after more than a decade, Tokyo Stock Exchange was made to reassure the public that the matter was solved to prevent wrecking its market reputation globally. The culprit has remained anonymous because Mizuho Securities never disclosed his identity. Most people also think the brokerage firm did the right thing concealing his identity because it was only a mistake and a mistake that cost a lifetime. Mistaken trades are not new to stock markets, as well as fast finger errors. And these errors are more of the reason behind vast losses and numerous big market crashes. Computerized networks within stock trading markets may snatch fat finger negligence before they appear on the market. Maybe such orders may be revoked before they can be traded. The bigger the order may appear, the more likely it is to be canceled from the market, as it may be order more prominent than the amount of stake accessible. Improvements in technology have been so significant in contemporary times that markets are overwhelmingly steered by computer system usage. I hope you enjoyed today's video. Kindly leave us your comment in the comments section below. Also, don't forget to subscribe to our channel, hit the notification bell for more exciting content, and like our video. Thank you for watching, and see you in our next video.